Welcome to our Friday edition of Agriculture Today. And we'll get right into the grain market scene as we typically do at week's end. Along with us once more, Dan O'Brien, grain market economist, K-State Research and Extension, checking in from his office in Colby, Northwest Kansas. Putting it this way, Dan, the price trends in the grain markets a little more spring back in their step, so to say, this past week.
Sure, an interesting situation in that we're on the cusp of harvest out here where my office happens to be in far western Kansas, northwest Kansas. Some of the more drought affected dry land acres have been cut, and I'm sure that's you can look at the progress around the state, southeast, pretty strong progress, and there's a lot of harvest going on, and the futures are holding up really pretty well. Been looking at the basis here of late, and basis really in all these areas has declined some. It's interesting that basis in the eastern third of the state, corn basis, has fallen to a level at or lower than the average of the last several years. Not terribly, but but from a strong basis levels this summer, now as supplies coming on, that basis has gotten more in line and maybe just a hair weaker than normal. In the central part of the state, this is for corn, the corn basis has declined some, but really towards the top end still of anything we've seen the last several years. In the western third of the state, the basis has also declined some, weakened some for corn, but we still have the strongest, tangibly the strongest basis that we've had since and including 2017. So just a tale of three different relative weakening of basis levels. I would add, and that's with D's corn 529 and a half. And we do these on a weekly basis. I looked at where prices were last week, and I basically just changed the number by a quarter to a half of a cent. Again, not a lot of change. In the futures, I looked at the volatility numbers. The Chicago Mercantile Exchange provides volatility indices, and volatility in corn futures has been declining. So with sideways to slightly lower futures, but volatility, again, the up and down, the daily jumping around, having declined some, declined a lot for corn, but yet we're still at 529. To me, that looks like a market that I said, okay, harvest is coming on. We still see positive factors out on the other side of this harvest, typical harvest, weakening in prices. So with that in mind, we still are sitting at a price 529 for the futures. That's a historically a very good price. So to me, again, sideways futures, declining volatility now, and pretty much says to me that we have optimism beyond harvest that when we get supplies available and our Hurricane Ida damaged port system gets to full functioning, that we'll see, kind of borrowing from our livestock people, some compensatory gain in where exports will go. So that's a positive. And you have similar stories, almost identical stories for soybeans. Again, 1284. Again, we're used to seeing now 13s and 14s in those numbers, but 1284 still historically a pretty good price for a close yesterday for November soybeans. And again, if you look at the trend downwards, a little bit more than corn, but volatility really dropping off for soybeans. But yet we're holding up at 1284, and really pretty similar situation. It is interesting for soybeans. You've got total sales for this marketing year, sales and shipments together, about 852 million bushels. That's about 41% of the way to the USDA's projection of 2.09 billion bushels. And we're only we're about 3 weeks into the marketing year. So we're at 41% sold ahead, and we've just started the marketing year. So I think that number is part of what's fueling the underlying support for prices, for futures prices at this time. And the corn number, again, about 40% of the way to the USDA's projection in terms of what's bought ahead and the little bit that's been shipped, with again only 3 weeks in, about 6% of the year marketing year. I would add to complete that loop, for soybean basis around the state, we have seen basis weaken in different areas. Again, surprisingly, perhaps still the stronger areas relative to as we come down, as we weakened in our basis levels, in the central part of the state, particularly for Salina holding up decently, Topeka holding up decently, even Colby holding up. You do have Columbus probably falling more relative to where harvest basis levels have been, but still not terrible. And so I guess if we had a complete washout coming in the markets, I think the local grain elevator managers would respond more, and we'd see all that much more weakness in that basis level. But given what's bought ahead, anticipation of strength, again, once we get through the damages once we get soybeans available, we have it more of a free flow in coming through the Gulf, and we see what's happening, how the current wet situation, high Chinese corn and soybean futures actually play out. I think all those are kind of underlying supporting factors, even in the midst of our current harvest.
On that very latter point, you've been watching, well, worldwide weather events for sure, but in China, they're having issues again, overly abundant moisture, and their prices are starting to escalate considerably again, which may put them right back into the market more aggressively and stay in a buying mood, Dan.
Well, there's a quote ways to go, and you hear news headlines about Chinese energy policies changing and all of that, but still they've been coming to the market of late with purchases. They had, kind of surprisingly, within the last week, went ahead just probably because of Hurricane Ida and lack of availability out of the U.S. They had gone in and bought some very high priced. Their buyers had bought a number of a good quantity of soybeans at very high prices. So that's probably just a band-aid to get through the time until U.S. supplies are available. So here we're sitting at the cusp of harvest. If you look at the U.S., for soybeans, we're 6% harvested. In the U.S., we're 0. We haven't even started in Kansas yet. So again, more to come for that. For corn, in U.S. corn harvest is 10% done, and we're about 20% in on Kansas. Now, I would think that at least where I'm sitting at, drier areas on the dry land side probably coming out first, no doubt, or wet corn going to feedlots or whatever. Anyway, point is that we're on the front end of harvest, and pardon me, and with I guess the availability of supplies still coming, that's when I think we would see. We'll have a kind of a standoff between pessimism with the futures, because of whatever supply demand numbers we have, and then there's demand pull coming from export buys, and the basis probably be pretty strong. So we'll have to see. I would say that next USDA crop production WASDE report coming in about the end of the first week or so in October will be a big harbinger of where the markets will go. There are so many rumors of people being disappointed with corn yields, or being really encouraged with corn yields or soybean yields as they come, that we just have to get out into the fields and see what we have. But I guess to go against the flow, there's still room for surprises, even to the downside on yields. And given that, hey, we're holding up at these decent levels price wise, a 100, 200, 300 million bushel decline in U.S. corn production, U.S. corn production and or soybean production this year would be responded to, I think, pretty readily. take those ending stocks numbers for corn that are projected for this new crop marketing year from 1.4 back down towards 1.1, 1.2, and we're right back in tight supplies and fears driving buyers again. And for soybeans, of course, the last WASDE report actually raised ending stocks to 180 million bushels, but that's not much compared to the 5 and 6 we've had when we really had a lot of supplies. So 30, 40 million bushels lower for U.S. soybean production. I think I said hundreds. It's probably more in the 50 to 100 range. If we get surprise on the downside there, then you're back down towards 100 million bushels and scrambling again. So the volatility, I guess maybe if there's anything that weighs on my mind, Eric, in those markets is that this signal of almost a declining volatility, of no worries about where we're going is our current situation. But either from the demand side or the supply side, there's still room for shocks that could come in and break that, I guess, that docile narrative of the market and give us some surprisingly high prices. And probably the biggest issue would be some surprise that come out of the October or the November crop report to the downside. Crop reports to the downside for the size of the U.S. crops.
All of this, Dan, serves to say that producers can afford to be patient with their harvest time marketing, whatever form or fashion they choose to follow.
Well, they can. It's hard to do when you're staring right at 3, 4, 5, 6 cent per bushel per month storage charges if you're going into commercial storage. So that's and if you've seen what they've seen of late, pretty level prices, you have to I guess it depends how used you are to storing grain. If you have grain on farm, well, that's one thing. If you're a landowner and you get a note from wherever your grain's at, says, well, you can hold it for 15 days and storage is coming. A lot of those folks may or may not have the mindset to want to take on extra expenses. So they a lot of probably absentee landowner sales probably happen. And I'm not saying that's a bad decision, but we tend to in that state tend to avoid the cash cost risk. And this last year we did that, and we had a number of factors led to markedly higher prices post-harvest. And so people with that experience fresh in hand probably think a little bit more about storing grain, just with the idea that these problems overseas could come in and give us some higher prices later on.
Very well. A favorable market environment it is this harvest, though, for sure. And it's all talked about in full in Dan's notes on the trades at agmanager.info, posted each week. And Dan, thank you, as always.
Thanks, Eric. Take care.
That from grain market economist Dan O'Brien, K-State Research and Extension, opening up this Agriculture Today.